Happy Tuesday to you. It's the 18th of July. Joe with you here on another market roundup from Maverick. Let's break down these markets, sharing some ideas as always from around the firm. Just take responsibility for whatever great ideas you get from this. So let's break down what I want to get to. See if there's any news or some sort of an event that impact today, whether it's local, whether it's the Fed, or whether it is international, whether it's China. Those are all sorts of fun stuff to talk about. Current market analysis. We always do our top-down approach in these courses. We always like to talk about where the markets sit and our outlook based on its trend. So we'll discuss that. Sector heat map as well. We are in earnings season, so that heat map might get a little bit more speckled than we're used to with numbers being beat or numbers being missed. We'll take a look at that. Trade setups and opportunities. As always, we are an active trading proprietary firm. We share with the community, and there's lists and lists and lists of trade coming in. I wanted to share one of each of these good setups with you, but I do have a list that we can take a look at. Speaking of which, folks, Maverick Trading is constantly searching for the best options traders. We have a team of options traders working together to find the best setups. Maverick Trading is hiring options traders with more than 2 years experience. We provide trading capital, and our traders keep 70 to 80% of their profits. Join a trading team that gives you support, risk management, and capital. Click the Apply Now link in the video description for more information. Let's break down the market analysis real quick. What have we seen? Oh, not a lot. More of the same. Guess what? Another bullish day. Friday was super strong. We stayed high, came into on Monday, stayed flat, didn't really pull back. We were discussing this on the weekend class, and it's kind of what we've expected. Taking a look at our performance for the day, you can see the Dow's up 1%, S&P and the NASDAQ about 0.75%, and the Russell about 1.25%. Oil had a pretty good push to the upside. It's now about $75 a barrel. 2.23%. Gold also up 1.34%. So this was a general broad purchasing across the board. This is just a super bullish, optimistic market, and I'm seeing a lot of action in a lot of direction. Earnings season is ramping up. I really think that should be the next drive now that the Fed's kind of taken a back seat and we know where we're at, we know where it's going on. Retail sales signals a slowing consumer. That's almost a tongue twister for me, but it did. We're seeing a little bit less pressure from the consumer. This has been a concern of mine for months, talking about, hey, inflation can curb itself and we could put things in action even though we've come from such a peak of that. It's the consumer that's actually going to drive this moving forward. We do have a couple things I'll talk about here in the last slide, but we had a new home sales number that was pretty high, way outside of expectations. ADP employment and employment in general continues to be wide open. So I think that retail sales, me personally, is going to be kind of that gauge of what we can expect inflation to do outside of just some of these PCE and CPI numbers that we've come to see. How do we finish here on the advanced decline line? 68% advancing, 29 declining, so definitely moving higher and another surge in an overall bull market. Above, below the 50-day moving average, we are 3/4 above. And this one has taken its time to actually get to that number. It was pretty interesting. Why I see that is probably because it's the darling stocks that have already exceeded and have been high since the beginning of this year, continuing moving higher, where some that have struggled are still struggling to get above that 50-day moving average. So I am still seeing outperformance and strength in what has been strong, and weakness and struggling in stuff that has been struggling. Shocker, right? Nothing's really changed. Let's just jump straight into the chart. So what I notice on this chart is a beautiful breakout candlestick. What's neat about these is you usually get a pullback before you get a candlestick like we had today. These usually occur somewhere. Well, here's one right here. There's a classic example. Just to get a bull pullback or price correction before you get a surge to the upside. Pretty choppy all through this. I can chalk a lot of this up to, folks, and we talk a lot about this at Maverick. We got videos on it. Summer trading, doldrums, slow stuff, right? Not a lot of, it's choppy, but it can also be volatile. So we know that we have been expecting that. This last move to the upside could be a little bit of an exhaustion move. We've seen this before we had a correction, but it's neat to see that it was actually at this 450 mark before that happened, showing some resilience and some strength and some follow through for some of these bears. It's got to be tough carrying these positions over the weekend going into earnings and be able to put a candle out like we did today. So is it extended? It absolutely is. Is it time to be bearish? Absolutely not. But we might want to rein in some of our bullish excitement. Maybe instead of looking at 10, 15 different bull trades, maybe we focus on 2 or 3 good ones. Or, like we were talking about on the weekend, it's okay to let these markets pull back or consolidate for a week before we do anything. Cash is a position. Let's move over to the Qs here. Same idea, just extending. We have seen some interesting moves when it comes to the communication side of things. AT&T smashed, Verizon hurt, getting pretty selective. But understand this does harbor, I should say, or absorb companies like NVIDIA, anything to do with AI that's been going crazy. So we do have this nice aggressive slope to the upside. This one is a little bit more extended to me personally than the last chart. However, super bullish, still a great place to be long. Might feel like you're a little bit toppy here. Getting a brand new position, maybe not so much. Managing a position or taking some profits on some of your bulls, that makes sense. Remember, we follow our plans. We don't just randomly pull them off. You got to make sure they come in before we do anything with them. Let's move over to the heat map. The heat map here is a little bit more speckled than I would expect. Actually, that's not true. It was kind of funny. I was just looking at this. This is Lockheed Martin. They announced this evening, and it looks like they're slipping. So we're going to see a whole lot of this. PLD was also in that line. But you got Microsoft and NVIDIA. The darlings are back to work. They're moving higher, but not a lot of participation in Apple. This is super common, folks, when it comes to earnings, when it comes to extension and sector rotation with traders that have profits that they might want to book and take. Here's a great example. Here's Verizon. Take a look at this, 2.6% up. But if you take a look at this chart, it is oversold bounce, right? So it's going to be very difficult to get an overall feel of the heat map or from the heat map when it comes to true sector performance, especially through earnings. So we might want to just kind of smile at this, take a look at it, go investigate the stocks that are on it. But past that, don't look too far into it. What does that leave me? Well, I'll tell you exactly where it does, folks. We're above the 20, above the 50. Slope's great, +3. Been +3 for a long, long time. You guys, we update you every day. You probably getting sick of us saying this. However, if you know me, I'm going to turn my weekly volume just a little bit down. I'm going to turn it down to a little bit more reserved. I'm not afraid of these markets. I am not going to go bearish or try to short these in any way, shape, or form. But if there's a couple of bulls that look extended, I might give them a few days to correct and see if I can't get the correct price for the strategy I'm looking for. I could also throw on a little bit of my bears if I'm looking for something that might be sideways or down. So let's jump into that list while we're here, right? So you can see I've got some potential bull trades. I've got some bears and some sideways. Sideways, I'm going to warn you folks, is going to be super difficult as we get deeper into earnings. Nothing stays sideways for very long, good or bad news. So keep that in mind. Now I pulled one chart out of each of these. So let's talk about that. This is RRC, Range Resource. This one has been up and down, or I should say back and forth when it comes to bullish sentiment for a while in the community. So I do like this hit at 30. Today was a little bit of a head fake for me. I'd like to see this confirm and trade there. We could easily get that in the next day or so. But we do have a really nice ascending triangle pattern. It's sloping here. I do like these last two pivot points just below the 20 at that 50, which is rising. Very strong chart. Looks like a really good one for something maybe diagonal, some sort of a vertical spread. Now moving to the sideways, this is Alcoa. I've got a few to look at, but I told you I had my little disclaimer a second ago. Sideways is kind of off the table as we get into earnings. Alcoa might already be past. I don't know. Triple check, always double check any trade you make to make sure you're past its earnings unless you're trying to play it for earnings. What I do like about this, it is pulling back to its moving average. I should say moving averages. What I like there, also flattening and going sideways here. So we've got a really good support resistance area. It's kind of consolidating through here. Really neat if you want to do some sort of a condor or butterfly. Those things can be pretty cool. Also, if we are getting a little bit too close into earnings season or something that's a little bit too volatile that you might not want to put sideways on, you can do it shorter term. Alcoa does have options that I believe they have weeklies. I should double check that. But anything that does offer a weekly option expiration, you're not locked into this thing for the full month. Keep in mind that any sort of credit spread, it's very dire for them to expire to really get that last 70 to 80% of gains. All right, and then on the bear side, I've got Micron. Now, Micron, it's jumbling around here, but I still like it. It's not the prettiest of patterns. You can see these last few days, a move shoots straight up on Monday, then it gaps down. It's trying to climb back up, but it's still within this slope. And more importantly, folks, I'll erase this. Look at that crossover, the 2050 crossover. If this can resist that 66 level, I'd like to see it a little bit below 64. This might be a nice little trade to the downside, something diagonal. Something that you could roll from shorter term to longer term. If you have the means, a straight put with a target might be the easiest thing to do, as this might roll over and fall pretty quick. So I kept what we talked about yesterday. This bullet point, a little overextended pullbacks likely. That's from yesterday. And why is it from yesterday? Because we don't change our outlook based on one day to the next. We have trend. We follow trends. If it's extended, it's extended. We're expecting a pullback, and if we wait and we're patient, it's likely to happen. Earnings will drive specific stocks. However, with a lot of my bears that I chat with, this bull market is another story. Don't fight the bull market. If we see stocks miss numbers and warn, and I don't know if you guys remember the first round of earnings season just recently, there was a ton of warning. Lower projections, warnings. Take a look at what happened the last 3 months in the markets. They don't really care. So let's get out of its way, bears. Step out of the way of the bull surge. Housing starts and existing home sales are coming up, along with leading indicators, and that's about it. Like I say, that retail sales number was pretty interesting to see. The consumer is actually taking their foot off the gas. But if you folks remember, new home sales was one of the highest I've ever seen it. It blew numbers out of the water. So in that aspect, we'll see how active the consumer is specific to housing. We will also have the leading indicators. I don't think that's going to be too big of a deal since we are recently out of the wake of the CPI number. And we've got a pretty good bullish surge that seems to have carried over from last week. Earnings reports, definitely getting into the front end or to the meat of it. Be aware. Look at all these banks. You got BAC, Morgan Stanley, Lockheed, Mist. Looks like they're slipping. PLD, Schwab, PNC Financial, and then you've got the New York Bank of Mellon. That's just tomorrow, folks. We got tomorrow afternoon, and then you got the next day, so on and so forth. So be diligent, check your earnings, and be aware of that. All right, folks, thanks so much for joining me. We'll talk to you next time. Bye, everybody.